Hey guys, welcome to a live market update with Buying South Florida. Really excited to announce the changes that we have today. We have really good products, new announcements to bring to you guys. So we'll get started right away. The most exciting of the changes and new products that we have is the new down payment assistance program. This is a true down payment assistance program. There's no repayment required. A lot of these down payment assistance programs that you hear of out there and grants and so forth, they typically come in the form of a second mortgage added to your property. There's some restrictions on those programs where you have to live in that property, 7 to 10 years if you sell or refinance a property before then, or if you move out from the property, you have to repay that second mortgage, that down payment grant that you were given. Not with this program. This is 100% forgivable. There's no repayment required. The two options are you can get a 2% a down payment assistance program or up to 3.5% down payment assistance. That's 3.5% of the purchase price. You do have to be a first-time home buyer. However, there are some small exceptions to being a first-time home buyer, but if you want to know a little bit more about this program, please reach out to me. I'll be more than happy to verify if you do qualify or not. There's some criteria that you have to meet, especially being a first-time home buyer. So that's the first one. The second new product or loan product that we're bringing to you is the Lock and Shop product. So the approach that we've been taking with our buyers is we get your loan ready for underwriting, we submit your loan to our bank, and now we have a full underwriting approval. This is significantly stronger than a pre-approval or a pre-qualification. It's stronger than a DU. Some of you may have heard those words. This is an actual underwriting approval. So what we're doing with our real estate team is we are underwriting our loans, and from there on out, our team can make cash offers on all of their properties, right? So what does that mean for you, for the buyer? If you're in the market to buy a property and you bring us your loan file, we'll actually underwrite the file with our bank. We secure financing, and now you can go out there and make cash offers or offers not contingent on financing. That gives you a significant advantage over anyone else who's making an offer that's financeable or financing an offer, and it'll just make your offer stand out significantly more. So one of the things that we're doing is we're underwriting our loans, and then our team of agents are going out there and making cash offers on your behalf. It has been giving us very good results. You have to work with an experienced agent. This is not a process for someone that's not experienced or part-time in the real estate market to do. It's very intricate. You have to be experienced and know exactly how to navigate this transaction to be able to protect your escrow, protect the transaction from going sideways and so forth. But if you work with the right people and done the right way, your offer will get significantly stronger by letting us pre-underwrite the file and making a cash offer. So keep that in mind going forward. If you're not working with one of our real estate agents, the agents in our team, let me talk to that agent that you're working with, and maybe we can bring them up to speed on how to get you qualified for making cash offers. Okay, so it doesn't necessarily have to be an agent in our team, though we'd love for you to work with one of our agents. But if not, then we can always work with your agent, bring them up to speed on the process, and maybe that can yield you the results you're looking for. Second is, or third product that we're bringing to the table is a temporary rate buy down. So you may have heard interest rates have been going up recently. One of the things that we're doing is we've already launched a product that allows the buyers to receive a seller contribution to temporarily buy your interest rate down up to 2% lower than whatever the market is. For example, not to get too technical, but in general, if we have an FHA loan at, let's say, 5% interest rate, and we take advantage of the temporary buy down, we get a seller contribution, and now for the first year, your interest rate will be 2% less. So the first year, interest rate is 2% less than whatever you qualify for. The The second year, your interest will be 1% less than whatever you qualify for. And then in the third year, the interest rate goes back to the 5% that you would have qualified for originally, right? Obviously we have to do credit check, you have to qualify for certain programs, but that's, I'm using a 5% interest rate just as a general, just to be able to give you an example on how that product works. So if you've been pre-qualified, or if you're in the market to be pre-qualified, give us a call and ask us about the temporary rate buy down program. It may be something that you're interested in. Fourth, the loan limits are increasing on the conventional FHA, VA programs. We've already implemented the higher loan limits into our loan, so you can take advantage of that right now. You don't have to wait until those loan limits go into effect in the next month or so. So if you're in the market for a jumbo loan, you may now qualify for a conventional mortgage instead. So give us a call if you want to know the details about what the maximum loan limits are and how you can take advantage of that kind of underwriting. Overall, we're seeing the market rates continue on an upward trend. However, we are also seeing the market trend on rents continuing to go up at an even higher rate. So it's important to know your goals, what it is that you're looking for in the future in terms of housing. If you are someone that your rent renewal is coming up, you may want to give us a call for pre-approval. You may already qualify to buy a property, and you can stop paying those rents, right? So we have a couple of questions from our social medias, and maybe we can answer these. Now I can see first questions: can I lock my rate now at pre-approval? Yes. So our lock and shop option actually allows our clients, or allows us to lock our interest rates for the clients, right? So at pre-approval, if you think the rates are going to continue to go up, you do have the option of locking in your interest rate now. We can lock it in for 30, 60, or 90 days. Obviously, the longer we lock it for, the more expensive or the higher the rate will be because of market volatilities. But it may be an option that you want to take advantage of. Other question, what if I lock my rate? What if I lock my rate, but the rates go down in the process of shopping? So we have about 17 residential lenders, and ideally we'd want to keep you with a lender that we pre-qualified, pre-underwrote your loan with, and locked your interest rate with. If the rate drop is significant, then we can talk about moving you to another lender. That's one of the advantages that we have as mortgage brokers. We have multiple lenders in our disposal. If you were to go to someone, an online broker, or your local mainstream bank, you only have that option. If the rates drop and you're already locked in with them, you may not be able to take advantage of the lower rates. So keep that in mind as well. How much do I qualify for? How much do I qualify for if, I think this person meant, how much do I qualify for down payment assistance, right? So we have two options. There's the 2% program, and then there's the 3.5% program. And how much you qualify really depends on your debt to income, your credit score, and your income, your debts, and so forth, loan amount. So we could always determine that at pre-approval. And if you want to take it a step further, we could also go through underwriting, get you underwriting approved so you can make cash offers, and we'll be able to tell you how much it is that you qualify for at that point. If I do a rate buy down program, is this a fixed or variable interest rate? It's a good question. The loan itself is a fixed interest rate for 30 years. We don't like to do anything variable unless the buyer asks for a variable interest rate. Otherwise, we just do fixed loans and that's it. In my opinion, those are significantly safer, and variable interest rate loans should only be done by someone that's experienced in the real estate market, has bought multiple properties, and understands the implications of doing a variable interest rate. So yes, these loans are fixed, and the only difference is that the first year, whatever your fixed interest rate is, the first year will be 2% lower The second year will be 1% lower. And then the third year, you just have the normal interest rate that you would have had otherwise. And that's it for our market update, guys. Really good changes, really good programs and processes that we're implementing, helping you win more offers, making cash offers, taking advantage of down payment assistance programs and so forth. I really look forward to hearing from some of you. Any questions that you may have, leave a comment down below. You could always text me directly or call someone on our team. We'd be more than happy to help. Otherwise, stay safe, and until next time, see ya.